Never gonna come down. Never gonna break down. Never gonna come down. Never gonna break down. Can't get this to share everywhere. What's going on today? So the way I have like even the Son of a Tech Facebook page set up, like you can't post to it through like those little share buttons. Makes it hard. All right, there's that. Nice. There are cards at Best Buy apparently today. There's a drop. I don't know about an online drop, but in-store drop. Getting reports of that right now. So maybe go check your local Best Buy. To be honest, skip the show and go check your Best Buy. Leave a tab open for a homie, but if you really want one, you probably need to go now. All right, hold on. I gotta text a couple. There we go. Yeah. Yeah, what it do? What does it do? It mines the Bitcoin. It mines the Bitcoin. Oh man, I'm gonna be loopy today. This is gonna be fun, boys. Let's get into it. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I am your host, Blind Run, and yes, I own a mining farm and I run it all by myself. I do not have any employees and I handle the YouTube channel and all that. So I got all the experience from electrical to whatever else. And I like to talk about cryptocurrency as a whole on this show. Today, I'm a little light on preparation due to some outside events that I didn't have control over. And I'm a little loopy and tired. So we're going to try to get through this. But we're having a fantastic day with cryptocurrency. The pump feels like it's back. A new bull run is brewing somewhere. I'm feeling it. I'm feeling it. I'm seeing the greed and fear index start to pop up. I'm starting to see some of the best GPU mining that I've seen in a long time, meaning it's not just Ethereum anymore. You can mine a whole bunch of things and still be profitable, which is awesome. We're going to talk about all those options today, especially one in particular, which is Ergo, which we're seeing current price discovery on, and it's going to get really interesting to see how this plays out. There is a key point to this. We're going to be talking about it, and look, we try not to shill. What we try to do is look at everything as objectively as possible, which means, yes, we'll talk about the positives. We'll talk about the negatives. We're going to talk about all of that. We're also going to be doing the market wrap up for the week, which is basically coming from CoinDesk. Crypto's rise as Russia mulls Bitcoin for oil payments and Dogecoin rallies. So if you got those L3 pluses, hey baby, we're looking good. It's looking great. Also, we're going to be talking about why crypto mining actually matters. And this is basically going to be an opinion piece, once again, from CoinDesk as a part of their mining week. And they are going to be talking about the ideological arguments for proof of work and proof of stake. And we're going to get into those. That should be a really fun one, because you guys know that basically we've turned into the most controversial crypto mining YouTube channel on the internet. So it is what it is. We're here to try to do the best that we can with what we got. and we may come into some differing opinions. If you have a differing opinion, I always welcome in the comments or in the live stream chat. That being said, demeaning behavior will not be responded to, so that's kind of out of the play. Let's go ahead and get into it right after a word from today's sponsor, which is yours truly. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. Welcome back, everybody. So let's go ahead and pop right into it. Market wrap, cryptos rise as Russia molds Bitcoin for oil payments. Bitcoin rose 4% over the past 24 hours compared with a 6% rally in Doge. Most cryptocurrency traded higher on Thursday after Russia's Duma committee chairman suggested during a news conference that Bitcoin could be accepted as payment for the nation's oil and other resource exports. If you guys aren't familiar, basically what happened earlier in the week is kind of this mulling over of the idea of Russia charging the UK for their energy exports in the ruble. And now we're seeing kind of this other idea, which is Bitcoin. It's very interesting because obviously what's going on with the sanctions is essentially kind of blocking Russia from participating in the US dollar. And so Russia was like, well, 40% of our exports essentially go to the UK as far as energy exports go, raw materials, that sort of thing. So we'll just fight back by making them pay in the ruble. Just a little bit of context. Now, as with all news surrounding, of course, the Russia-Ukraine involvement, I take it all with a hint of salt because, look, man, everybody has their narrative. Everybody has their agenda, and the propaganda from all sides makes things very hard to navigate. What we do know, though, is that these are going to be essentially financially driven, economic driven decisions between everybody. Let me get rid of my Rocket Chat here as I'm getting blown up. And thanks everybody for messaging me, but we can't have that going on in here while I'm trying to do a show. There we go. All right, so let's continue on. Russia's announcement contributed to a spike in Bitcoin above 44,000 US dollars, although cryptos were already tracking upside moves in equities earlier in New York's trading day. Still, traditional safe haven assets such as gold and the US dollar also rose on Thursday, suggesting some caution among global investors. Alternative cryptocurrencies, altcoins, remain in the lead, evidenced by a decline in Bitcoin's market cap relative to the total crypto market cap over the past 2 weeks. Dogecoin, the popular dog-themed meme token, rallied as much as 6% in the past 24 hours compared with a 4% rise in Bitcoin over the same period. Meanwhile, Solana's Sol token was up 10% and Axie's Infinity's gaming token AXS surged by 20% on Thursday. Typically, a rally in altcoins signals a turnaround in the overall crypto market as investors increase their appetite for risk. Yesterday, I had a tweet and I said, I think we're about to have the most profitable GPU mining we've seen since July of 2020, post-merge for Ethereum. Part of that is due to what we're starting to see in the markets of this shift to altcoins. And a lot of miners are starting to starve as well, or have an increased appetite for another option, right? Because Ethereum's threatening this proof of stake move, the merge. We don't know exactly when it's coming. June at the earliest, probably not going to hit that. Best estimates from the most knowledgeable people in the crypto mining space, like Bitsby Trippin, says around December. Either way, we're seeing that start to play out. But we have this threat of alternate currencies that are coming in and starting to build up. And you're going to see that today as we start talking about mining profitability as well. this does look like, I'm cautiously optimistic, but this does look like we're going to have a pretty big turnaround for GPU mining. We're already seeing significant increases in profitability on GPU mining, even compared to the ASIC mining crowd. Of course, that's starting to catch up now with the Dogecoin. If we're talking about script algorithms, we'll be looking at all that as well. Meme stock pump ahead of Bitcoin. Elsewhere, meme stocks tend to lead traditional equities higher, similar to the risk-on nature of altcoins in the crypto market. Meme stocks are popular among retail investors who exchange trading ideas through social media. In 2020, internet memes were created to symbolize periods of sky-high prices. The chart below shows a recent uptick in the correlation between Bitcoin and the index of meme stocks, created by Lev Brodovsky, there we go, editor of the Daily Shot newsletter. Several meme stocks, such as AMC Entertainment, rallied as much as 30% over the past week. DeFi still lagging. Decentralized finance, DeFi tokens, however, continue to lag behind large market cap cryptos. The chart below plots CoinDesk DeFi Index, DFX, versus CoinDesk's Large Cap Index, DLCX, over the past few months. The gap between DLCX and DFX has widened, which could indicate less appetite for risk among crypto investors. There's another thing here too. It's a shift in the way people are investing, right? So they are investing directly in coins. They are not participating in DeFi as much. What does that mean once again for GPU miners? This is a good sign because we're basically seeing more appetite, in my humble opinion here, for generally like blockchain technology at the base level, like layer 1 type stuff. Still, recent rallies in DeFi tokens could lead to outperformance versus large cap tokens, similar to what occurred in mid-2021. For example, DeFi tokens such as Aave and AMP have rallied as much as 9% over the past week, compared to a 7% rise in Bitcoin over the same period. Dogecoin leaps to a 1-month high as ATM operator adds to crypto lineup. Dogecoin touched a 1-month high Thursday a day after Bitcoin of America announced plans to add support for the doggy-themed cryptocurrency to its network of more than 1,800 ATMs across 31 U.S. states. Doge's price rose as much as 6% in the past 24 hours, touching 14 cents in the US dollar at one point during the day, the highest since February 21st. Read more there. We don't need to. We have more information too. Diplo joins Nas with NFT drop on tokenized royalties platform Royal. Crypto music startup Royal has nabbed Diplo as its largest star, announcing Thursday the DJ and electronic musician will be releasing one of his new songs on the tokenized royalties platform. The single Don't Forget My Love will have its royalty rights embedded in what the platform calls limited digital assets, LDAs, which are essentially Polygon-based non-fungible tokens, according to CoinDesk's Eli Tan, and you can read more there as well. Links in the description if you want to go get into more details on these little news topics here. South Korea's SK Square will launch crypto token later this year. SK Square, an affiliate of SK Group, South Korea's third largest conglomerate by revenue, plans to launch a cryptocurrency by the end of the year. The token will be the first of its kind launched by any company under the purview of South Korea's top 10 conglomerates. The cryptocurrency is aimed at integrating virtual economies across the group's businesses, the Korea Economic Daily reported. It will be used in the SK Telecom's metaverse platform, iFlind, SK Planet's membership program, and 11ST's e-commerce services, according to CoinDesk's Eliza Gritsy. There we go. All right, so that one actually sounds like a pretty big deal because if you guys aren't aware, it does seem like for the most part, South Korea is typically obsessed with technology and getting into metaverse and all that. If I was going to pick like a metaverse geographically based, it would kind of be like a Japan or a South Korea or something like that, right? It would make a lot of sense. You see a lot of like gaming in those areas compared to like maybe like the United States, which would come in below those countries as far as participation in a metaverse, at least how I would see it, at least per per capita, right? Let's talk about why mining actually matters and get into this opinion piece about the ideological arguments between proof of stake and proof of work. This is by Dan Jeffries. Why mining actually matters. Ideological arguments over proof of work and proof of stake miss the larger point. Mining means the production of objective truth, says futurist Dan Jeffries. This post is part of CoinDesk Mining Weekly. Proof of work, proof of stake, a hybrid. One of the new algorithms like proof of history or snowball that next generation coins like Solana and Avalanche bring to the table. Over the years, we've seen fierce debates in the crypto community over the best mining solution. It's proof of work or death. Satoshi's original computing power race is the one true way. No, you fool. Proof of stake delivers 1,000 times energy efficiency and is much faster. But proof of stake is government by plutocracy, and that's horrible and must be stopped now. Perhaps the strangest thing about these debates is that the folks shouting the loudest have often no idea what they're talking about. They're not mathematicians or computer science researchers who understand the inner workings of algorithms and the trade-offs that each one brings. They pick their favorite coin the way they pick their favorite sports team and then hold on to it with fanatical determination. These shills, yes, they happen a lot, happen across not only between proof of stake and proof of work coins, but definitely also happen within those separate ecosystems as well. What I would encourage you to do is to detach yourself from your bag and look at things objectively, because if you can't do that, then you're going to end up basically harming yourself and your investments. Detach yourself from your bag. Look at things objectively. Do not come into one of my tweets talking about Ethereum Classic to talk about Ergo. Do not come into one of my tweets talking about Ravencoin to talk about Ethereum Classic and just spam the hell out of it. It's not going to help anybody. If we are like on Twitter or here having a discussion about a particular coin or a particular token, the reason that we're doing that is to fully flush out all of the details of that particular cryptocurrency. And we are not concerned necessarily about a versus thing at that time. Once we get into versus videos, then that would be a different topic. But at this point, that's kind of the idea that I run into a lot is like, I hop on, I'm like, hey, Ethereum Classic's doing this, this, and this. And it's like, well, what about Ergo? And I'm like, bro, chill out. All right, just chill. Okay. We'll get to Ergo as we are getting to Ergo today. Don't worry about it. Even calling them mining. Okay. So here we go. Let's see. Yeah, so just it's safe to say that we shouldn't take most of these uniformed opinions all that seriously when it's not much better than saying Yankees are better than the Red Sox. Even calling them mining solutions is a bit of a misnomer. Bitcoin created a solution that algorithmically mimicked gold mining, and we've been calling consensus mechanisms mining ever since. Most of them don't mimic mining, and even mining itself is a poor term for what's happening under the hood. Bitcoin's mining system mints new coins, secures the network, decides on order of transactions, processes transactions, and more. It's like calling the Visa network credit cards when plastic credit cards are only one tiny aspect of what Visa does to move money around the world. Even worse, what gets lost in these ideological battles is what makes blockchains useful in the first place. Blockchains are not interesting because of proof of work or proof of stake. That's just a means to an end. Mining and proof of stake and every other innovative new blockchain with some fancy new mechanism to make chains faster and more scalable are really just variations of how we get to consensus. The true genius of blockchains is something simpler and more fundamental. Back in 2015, The Economist called blockchains trust machines. You can trust the results without having to rely on the third party that enforces the rules and holds bad actors to account, the way we rely on Visa to fight fraud for us and roll back transactions when someone steals our card. That's a good take, but it's not the whole story. Trust is powerful, but it's not the real power of blockchains. Objective truth in the state of the world. To be clear, we're not talking objective truth here, as in all men must die. That's a philosophical rabbit hole anyways. We're talking about answering the question, what's true for this system? If we mean Bitcoin, then what's true for this system means where is all the money right now? Where was it yesterday? Which wallet owns what? And so on. Blockchains give us a way for people to answer questions like, what's the state of the world? How do I know? How can I prove it? And how can someone else prove it? Even better, they give us a constantly updating truth instead of a static truth. We know the state of the world right now and where it was a month ago and a year ago. Each new block is a point in time snapshot of where we are, and every block before it is a history of where we were. They are a way for us to decide on consensus reality across a distributed system. Of course, there are lots of ways to agree on objective truth across distributed environments. Some of them are a lot faster. Create a centralized database managed by a trusted third party, and you got the power to manage state, the set of stored data, across a vast and distributed system by acting as the final arbiter of truth. That's what Git is in the software universe. Git lets developers all across the world work on the same code and merge it together and resolve disputes if two people check in different versions of the code. It was created by legendary software developer Linus Torvalds to make working on Linux easier. Torvalds needed a way to get all those distributed developers to agree on which branch of code reigns supreme. And really, like, we could take cryptocurrency all the way back to something like GitHub, or the idea that we need open source, distributed software, because that's where the world needs to head for us to really get along. This proprietary software portions of like individual companies having total control, and these large corporations obviously cause a lot of issues when we get down to distribution of wealth and influence over governments and so on and so forth. So it's not too dissimilar in the fundamental principles along crypto. And by this, I mean open source software. So I think that's fair. Democracy is another example. In a nation state of hundreds of millions of people, it's hard to get everyone to agree. And so we elect representatives to argue about things and hash out the details of what laws to make and what we do next and why. Well, we could get into semantics of like democracy and then like a republic democracy and the difference between representatives and then like a true like one-to-one democracy, like a one person, one vote type deal, but we'll let it go for now. It's slow, messy, and sometimes ugly, but as long as everyone plays by the rules, it works to establish consensus. Problem being, of course, as we see as of late, is not everybody's playing by the rules, right? And the only way you can get people to start playing by the rules, theoretically, is to have some sort of consensus that's governed outside of the control of a single individual. This is why when people talk about Ethereum versus Bitcoin, for example, both of those are proof of work, but what you have there is a significant difference in the way governance is handled, where primarily for governance on the Bitcoin side, you do have a strong holding in the miners basically controlling that governance and putting in their votes. And then Ethereum, we do have basically kind of like almost like a board, like a traditional tech company or corporation would have. And I think it's very important for these distinctions, almost more important than the distinction between proof of stake and proof of work, the distinction between different governance mechanisms is more important in a lot of ways, in my opinion. The representatives debate a law gets passed, a policy gets changed, and we move forward even if it happens slowly, with a few steps forward and one step back, or 5 steps back and 1 step forward. But what if someone doesn't want to play by the rules? What if they want to break the system? They seize power and start tearing apart democratic institutions and rewriting rules so that they always win. They find the exploits and overthrow that democracy with an insurrection or a military junta. Coup, I think, whatever. I actually don't know JUNTA. I need to look that up. But let's just continue on. I think we get the idea. Like we just saw in Myanmar and throughout history in places like Japan in World War II. Here's what I would say. I don't think that it would be an insurrection or like a military coup that happens at this point. Now, obviously, I didn't think that we would be having World War III be the trending topic on Google either, right? So I could be completely off base here, but what I see is more of an economic war that's going to happen between like maybe China and the US and Russia and all that, right? So I would see it more as, I obviously with the sanctions and stuff, this is kind of what we're seeing play out. And so while I agree with the heart of the message, I think the path to which the tearing apart of democratic institutions and rewriting rules will be done from basically an economic power standpoint, right? Not so much a military power standpoint. At least if we all want to survive on this rock without, atomic war, essentially. How do you come to consensus then? Well, you don't. The winner writes the rules and everyone else on the wrong side of those rules suffer. That's the problem with centralized authority. It's fast, elegant, and simple, right up until it isn't. The problem with trusting a third party is that trust is a moving concept. The party can change the rules. Perhaps you trust a company like the company that runs your Git instance in the cloud, but what if it starts gating off features that were formerly free? Maybe it suddenly starts charging outrageous fees every time you check in code. What if it starts losing backups and missing data? Is it still trustworthy then? Or maybe you've got to trust in the rule of law and you say you trust the U.S. Department of Justice. But really, which one do you mean? Do you mean the Department of Justice during the Warren Harding administration where the Attorney General profited off prohibition and sold pardons to the highest bidder? Or do you mean the Department of Justice that aggressively prosecuted the Ku Klux Klan and dramatically reduced violence across the South in the 1870s? There is no Department of Justice as such. There are only people running it at the time. And that's the real problem with centralized consensus. If people behind it change, you can't really trust it anymore. A once trusted institution, like Ethereum, is now broken and the rules are changed on you. If they tell you the new truth is 1 + 1 = 3, Ethereum, then that's the new truth and there is nothing you can do about it. Even worse, how do you reach consensus across the entire world? A world filled with dramatically different ideologies, philosophies, and objectives. You have everything from autocracies to communist state capitalists, to freewheeling capitalist democracies, to European socialist systems, and everything in between. You have the far left and the far right. You have people who can't agree on the color of the sky. Yeah, well, it goes even deeper than that, doesn't it? Much less on abortion or guns or vaccines. How do you come to an understanding then? The real world is fraught with different desires, wants, and needs, and is clouded by hatred, prejudice, ignorance, and stupidity at multiple levels. I feel like this does get a little too cynical because I think the answers are a lot easier, right? Like if we're talking about like, and I'm probably just lean more like libertarian in these like thoughts or whatever. But like my idea of this is like a lot of it, like how do you come to an understanding? Well, a lot of what makes America function great for the most part, right? Like there's obviously issues, was the Bill of Rights to set forth things that basically gave individuals rights that, some would claim are God-given rights. But, at this point, we're just going to say basically protects those rights or the rights of the individual in certain circumstances, as long as it doesn't affect the health and well-being of another individual, right? So the reason that works is because essentially we can all live together and form some sort of society that is productive without actually having to set forth these stringent rules that follow some ideological path. And if you take a look at like any of the big topics, you could just really dwindle it all the way down to that kind of individual right point of view. And I think that you solve a lot of the problems. Part of the reason why I think a lot of the appeal to Bitcoin is towards the libertarian crowd is because of this reduction of government control, right? It's even just, it's an economic check and balance is what it is, right? At the end of the day, the real world is fraught with different desires, wants, and needs. And it's all clouded by blah, blah, blah. We already went over that. How do you get that broad spectrum of incompatible ideologies to decide on consensus reality? How do you get two rival companies to agree when they're fighting over the same market? What about two hostile nation states or nations in a shooting war? How do you make sure nobody rips up the rules and takes over the system for themselves and forces everybody to agree that 1 + 1 = 3? Before blockchains, the answer was you can't. When someone or some group manages to seize power from everyone else and impose their will, everything falls apart. There's no way to stop it. They take over, delete the database, rewrite the rules, and everyone plays by those rules, and there's no choice. If it's a company, as a consumer, you might move on. But if it's a nation state, you might find yourself stuck unless you can move to another nation state. And that's not an easy task for even the most intrepid among us. It's also important to note out that with currently the way that big tech is set up, you as a consumer, you can't move on because what are you going to move on to, right? Whereas the majority of video tutorials and guides to go ahead and help you learn your job or how to change oil on a specific car or whatever, it's YouTube, right? So it really has gotten to the point to where I would say it's just as much of a threat on the company level, on the corporate level, as it is on the government level. Actually, maybe even more so because a company, in theory, something like Facebook, is so ubiquitous across the entire globe that it really does control a lot of basically speak and so on, right? So I think it might actually be more dangerous. But I don't think we've come full circle on that either. Where blockchains really thrive is in chaos. They're a decentralized truth machine in hostile environments. They let us agree on ground truth, whether we're friends or frenemies or outright enemies. People can hate each other, want to kill each other, not agree on anything, and still reach a consensus truth together. We don't have to trust a third party to tell us what the truth is. We can look at the chain and see for ourselves. We can agree even when we all disagree. We never had that in history before now, and what that means for the world is something we're only beginning to understand. At the present time, we've used these powerful technologies only as a way to create decentralized monetary systems. That's no small feat, but it's only a small fraction of what they can really do for the world. Over the next 100 years, blockchains will play an increasing role as invisible arbiters of truth across hostile systems. Even better, we'll be able to build chains of truth that outlast lifetimes and hostile takeovers and regime changes. When it comes to monetary systems, we'll see the rise of international digital monetary systems where the consensus rules are defined by a hybrid of people and algorithmic consensus. Imagine a monetary policy that could easily take into account inflation as its governing algorithms consult oracles and then adjust interest rates and money supply, all without ever needing an old man in a suit to change a policy 3 months later when it's already too late. Imagine a monetary supply where 50 or 100 countries use it and all have a stake in the rules. If they go to war, they can still count on the money to be good instead of collapsing when their country collapses, as has happened hundreds of times throughout history. Every country will become a local node in the system, and when one of those nodes goes crazy or rogue, it won't corrupt the whole system. This is actually very relevant to the US dollar and everything that's going on right now. I think the reason why the US dollar has been so strong, obviously, is because its ties with Saudi Arabia and the fact that you have to purchase, or in the past have always had to purchase oil with the US dollar. And without like massive, large-scale European-based wars, that functioned pretty well for quite a few years, like decades, right? For the US economy, at least, not internationally. But once you start to see any kind of strife put onto the system, you start to see things fall apart. For example, like we saw today, of course, talking about Russia, talking about forcing the payment for their energy costs that they're giving to the UK in rubles, or even moving to Bitcoin. Or the fact that China is now talking about using the yuan to purchase oil from Saudi Arabia. And what I'm basically pointing out is that as soon as there's any sort of strife, especially as it comes to like a wartime, all of this facade of the US dollar starts to collapse. And it is a very dangerous thing. And we are going to have to keep our eyes out, because it is getting insane right now in this world. That means when a local dictator who thinks he's above the law of supply and demand tries to cut interest rates to stop inflation and instead creates runaway inflation, the local people won't lose their life's fortunes because he won't be able to make those changes. I.e. right now, if you're looking at inflation, or as Jack Dorsey got fact-checked on Twitter for, hyperinflation in the US, you could potentially move your US dollar into Bitcoin and protect from some inflation. Of course, there's other assets, other options. I'm fully aware of them, like gold. Real estate's a really good one too. There's other ways to protect it as well. You know, I'm not denying any of those. I'm just saying another option is Bitcoin. Another great thing about utilizing cryptocurrency for that protection is if you did need to flee a nation state for persecution or something along those lines, or just wartime or whatever, you really only have to think about what you know, which is your seed phrase, and get out. It can't be confiscated on your way out like something like gold. It doesn't have to be left behind like real estate would have to be left behind. Those types of things, right? Beyond money, we'll start to see blockchains become the ultimate arbiter of truth in dozens of their systems. Take property disputes. We'll see international chains that shows who owns what and how that ownership changes hands over time. That could be very detrimental, I think, to all of real estate and the way it functions right now, because I think that transparency is going to open people's eyes up to a lot of things that are going on, especially like, for example, the purchasing of farmland away from farmers by making it too hard for them to survive in the way that they're functioning, and basically turning all the farmland into not government controlled, but heavily corporate controlled entity within the US without the input of like what the citizens want, which is healthier food that maybe doesn't cause as much obesity, right? For example. I mean, I think at this point, we can all factually state that the biggest problem is the amount of food and the type of food, contributing to over 40% of US citizens being obese. But in the future, when you buy a bike online, it will register you as the owner to the distributed world chain that keeps track of it all. When someone steals that bike and the police pick it up, they'll know who owns that bike and be able to return it to its rightful owner. Those international property chains will also let people become fractional owners of all kinds of smaller pieces of property. Maybe you'll own a small fraction or of a local coffee shop you love, buying its shares right from your phone. Or you might go in on an apartment building with a few thousand other owners, making small dividends on rents that come in over time. You might own a piece of art with 20 other people, like an NFT, that conveys actual ownership rights, and when it changes hands, you'll automatically get a notification to vote on where that art can be displayed because the new owner requested an update to the rules from the ownership collective. These property ledgers will outlive political regimes too. When the communists took over China, they ripped up centuries of old property titles, massacred the landlords, and made the government the sole owner of all property. Hence why I said real estate could end up bad, right? Like, there you go. Owners found their family's house deed worth less than toilet paper, but regimes don't last forever, and a property ledger that survives even when someone rips up the rules would allow recompense when the regime inevitably collapses later on in history. Families from centuries past might find themselves able to claim back land they once owned or get paid compensation after a new, more friendly government returns to power. We'll see all that because transparent ownership databases almost always lead to secondary markets. The first companies of merchant kings figured out how to distribute risk with shares in the 16 and 1700s. And it wasn't long after that secondary markets developed where people could buy and sell the shares of those powerful companies. Today, we take it for granted when it comes to buying and selling shares in companies on stock exchanges, despite us having no connection to the owners or inside knowledge of the business. Property chains will open up brand new secondary markets and take the idea of a stock exchange to an exponential new level. We'll also bring blockchains to bear on activities like voting. We've already had decades of research into end-to-end auditable voting systems that cryptographically ensures no votes are tampered with or changed. We'll see blockchains become the decentralized audit database for those kinds of systems where every single vote is recorded perfectly, and even when people shout about massive fraud, they'll either be able to prove it or not based on a transparent record that nobody can alter. Blockchains will also play a critical role in evaluating the authenticity of voice and video recordings as artificial intelligence destroys our ability to trust what we're seeing with deep fakes that are indistinguishable from the real thing. As deep fakes become more and more common, they will become video evidence in court become worthless. The only way out is to have cameras record live streaming hashed authentications to blockchain as they film. Only the videos that have block stamps will be admissible as evidence, and everything else will be suspect. The impact of decentralized truth machines will change society in countless ways, and that can't come fast enough because in today's world, truth is breaking down fast. I think I agree with most of what's going on here in this article from the opinion piece. On social media, we're drowning in sea of voices. In an era where fringe lunatics can make their voice heard, often by shouting louder than everyone else, it's hard to hear the real signal through the noise. We live in an era of perpetual information warfare. People prove their beliefs with bizarre, insane facts that make no sense to anyone but themselves. Or they don't bother trying to prove anything at all. Instead, they just outright deny reality and create their own reality. Basically, a whole entire population, a mass population of narcissists. I mean, that's really what social media has created, right? And we all fall victim to it too. So like, don't judge each other too hard, but we've created a mass of narcissists. It's crazy. Today, you can tell someone the sky is blue, and if they're your political enemy, they'll tell you it's red, and you're a hideous liar for trying to convince them otherwise. The centralized citadels of truth have broken down. We don't trust institutions, politicians, companies, newspapers, media, authority figures, scientists or world leaders. Everyone is suspect. Everyone seems to be behind a wider conspiracy to defraud us all. Of course, there are objective truths. You're free to believe gravity doesn't exist, but go jump off a 100-story window and you'll find out you were wrong and gravity has a 100% win record at that height. The problem is not the truth doesn't exist, is that we can't see it anymore. As every third-party trust breaks down, we need a new system we can trust. We need an independent, open, decentralized system that records the truth of the system faithfully and consistently every single second of every day, an unbreakable chain of truth. It's time to stop thinking of mining as just a way to mint glorified Chuck E. Cheese coins. Proof of work, proof of stake, and proof of history are much, much more. Mining is the way Mining is the way to that unbreakable chain of truth more than anything else. Mining decides on how the system flows and how it is ordered. It gives us the state of reality that we all agree on. This is good. All right. And in a world where dictators and authoritarians and would-be authoritarians want to have ultimate power to ram their made-up truth and fake reality down our throats, it's never been more important for us to have a way to establish consensus reality across a system filled with hostile forces. They are how we come to decide on what the truth is together. The good news is that hope is on the horizon. Over the next 100 years, we won't need to trust an endless stream of charlatans, dictators, information warriors, idiots, fools, and reality deniers. We'll just turn our eyes to the chain and we'll know the real truth once again. I get the whole argument. I think it was a great opinion piece. Here's my problem. I feel like it really didn't set up why. It didn't argue why the mining portion for the consensus mechanism is more important than the staking. I can give you guys some ideas, but the consolidation of wealth is one of those problems, right, that we have. One of the big arguments I heard within comments previously when I've talked about this before is that proof of work is no different than proof of stake because Jeff Bezos could buy a whole bunch of mining machines and basically take over the network, just like he could purchase all of the coins and stake them. Key difference here that needs to be put into perspective is that buying a whole bunch of mining equipment requires infrastructure. I am drowning in just 20 machines running on the network right now, just me personally working on them. If you're trying to build that out at scale, you're going to have employees. You're going to have to hire people to manage the network systems. You're going to have to hire security. You're going to have to hire people to work on your HVAC. You're going to have to hire people to work on the buildings that you're hosting them in. It is important to understand that proof of work really means work. As opposed to that, if you were going to get into staking, all Jeff Bezos has to do is buy the most amount of the coin and spin up a VPS, drop it in there. And at the same time, he doesn't even have to pay for the VPS because he already owns all that. And you're done. And he can just take it all the way over. And the thing is with proof of stake, the more you have staked in most proof of stake consensus mechanisms. Now, there are some outliers. We're going to be talking about some of this a little later on and maybe some potential ways to resolve it. But as it sits right now, essentially, the more you have, the more you earn. Kind of like mining, except at a very lower level. It's a lot easier. You're not creating any jobs out of it. You're not contributing to society or to the economy. And we have like a whole bunch of other mathematical problems like he discussed here at the very beginning, which I was hoping he was going to go into detail on. It sounds like I'm going to need to do that work myself for a video here for you guys. But just the way that proof of work is calculated versus proof of stake does seem to, in general, be more secure from a consensus standpoint. And that's how I see it. Personally, and we'll get into more arguments on those later. Like I said, I was hoping this was going to go in a little bit more in depth. However, what I will say is that I think this was a fantastic opinion piece and really got to the heart of a lot of issues that I think we're struggling with as a society as we move forward and try to move out of kind of where we're stuck right now in this kind of never-ending wars and never-ending like just problems between each other and trying to determine truth, right? And the fact that like it is true that we have a ton of problems with not only just determining truth between regular people, but we also have the people that go on really fringe outside craziness, and you need something to point them back to and have that. Now, can blockchain solve all of that? I'm not really necessarily sure. I think that decentralization in general can, and I think that can come in many forms, right? But we'll just kind of have to see where it goes. What we don't want to see, just to clarify right off the bat before we even move further though into the show, is we don't want to move towards centralized control. And the thing is that blockchain can be used just as well for centralized control as it can be used for decentralization. So when you hear someone say, you know, I'm really hot on like central bank digital currencies or something like that, you need to explain to them that that's actually more dangerous because at that point you're taking the banks out of the equation and you centralize the control even more into the federal government. And that's the opposite goal of what cryptocurrency is. You could even look at something like XRP, which is working with banks to basically be able to send between each other and help facilitate banks. Well, the entire goal of cryptocurrency is to remove the need for banks. So from a fundamental standpoint, I wouldn't support Ripple, for example. However, I know a lot of people that do. So don't get fully blinded into thinking that anything blockchain is going to be move in the proper direction, because a lot of what's going on in blockchain can be moving in the improper direction, including, of course, Ethereum. So let's go ahead and talk about mining profitability for the day. It's looking pretty good. We are at 243 US dollars. We're not only up on US dollars from yesterday, but we're also up on amount of ETH. If you remember yesterday, we were at about 0.68 ETH. So we've gone almost, or 0.068 ETH. Now we're at 0.0676 ETH. We're getting more transactions on the network is what that means. The pool is finding more blocks. And then the price of Ethereum has gone up, resulting in the biggest day-to-day gain in mining rewards that I have pretty much seen this year. Yeah, seen this year. This is the largest gain, unless, of course, that weird outlier where you're on a small pool like Crazy Pool and they find like a huge block or something like that. Outside of that, this is looking like the best. Now, we can look at the blocks and we can go ahead and scroll through. And what we're really looking for is to make sure, like this 24 hours is not looking like there's any huge blocks. And there really isn't. You can see it's just basic 2 reward blocks. So having this day-to-day increase when we're not seeing any massive blocks hit is a very good sign. And I think it's going to get better and better as we look through to it. So everybody, hey man, it's looking good. I can't tell you, I can't promise this is going to continue. I'm not saying go out and buy GPUs right now. Me personally, I probably will. I'm still trying to save up for another ASICs as well. But, I did find, like, for example, there are cards out there that are going for as low as $7 per mega hash. If I see a $7 per mega hash GPU for sale, I am going to go pick it up personally, because, like, why not? That's hyper discounted and looking really good. On Flux, we're not great. It says around 6 coins a day. We are getting an additional, and I keep forgetting to talk about this, we are getting an additional 2.5 coins on the parallel assets. So technically, we're really at somewhere between 8 and 9 coins a day, which could be around $13 to $15 a day on 6 GPUs. I am only utilizing GPUs that do not perform well on Ethereum due to either light hash rate or just perform better on Flux because of their core count, essentially. So the RTX 2080 Ti, for example, and then pretty much all of the light hash rate GPUs, which I only have 4 of them, but they're all on Flux right now. Is that the best move as of right now? Not necessarily, because we are starting to see other altcoins start to pump. And these altcoin pumpings are very, very interesting as well. Let's look at Luck Pool, because I am still doing Verus at this point, I think it's still like, it's not loading. But yeah, we're still at 1.5 Verus coin a day. Just playing with it. It's very solid. It doesn't overheat the processor that much, and the load averages aren't pinging me all the time. And it scales based on cores, not on cache. So it works really well on something like my 1950X, which doesn't actually perform well at all on like cache heavy algorithms, for example, like Raptorium, right? So it's kind of like one of those things. Like now the 3600 XT probably would be best on like Raptorium, right? The 5600X, the 5800X, those CPUs with relatively high cache per core are going to maybe be, better on something like that. However, I just kind of have them all thrown on here. Part of this is research for the Verus hash algorithm that I'm doing for my own pet project, which is releasing a smart chain. So just all that out of the way. Let's look at what to mine though. And this is where things get, well, interesting today. What we have here that you're going to see, and we started talking about this yesterday, is we now have two coins over two coins outside of Ethereum over $3 per day after power. Over $4 a day, we have two coins as well in revenue. We have Ergo and Ethereum Classic. We're seeing a huge pump in Ergo right now. Now, why is the pump happening is something that's a little aloof. I can't actually give you a specific direction right now. Like I said, I was a little short on research, but there's nothing like in the top that we can look at. The only thing I can see, the most obvious thing, is of course the pump in Cardano, which is not directly, but it is related to Ergo as well. Ergo's been doing a very good job with the DeFi apps, for dApps in general, with their NFT programs, just everything as far as like the development on Ergo is looking really good. The downside for Ergo, of course, is that we already have seen changes to the monetary policy, and at least proposed changes. And if I look at it objectively, like completely objectively, and I see the emission rate, and even if they extend it out, I do see the problem. I understand that they would run out of that block reward too soon before there's enough activity on the network to pay for security out of fees alone. The thing is I don't think the re-emissions contract on Ergo will extend it long enough. So if I had to make a prediction, I think we will see even more re-emission contracts being proposed and deployed on Ergo. And that's something you're going to have to expect if this is the coin you're going to move towards. Now, as miners, though, we are primarily focused on profit. So there is that profit in there. However, I just want you to keep that in mind as we move forward through this. I would predict another re-emissions contract because I don't think that the current one will even push it out far enough for it to really make sense. I think that it'll run out of steam and not have enough activity on the network to purely pay for security out of essentially transactions. The transaction rate's going to have to significantly increase on Ergo for that to really be the case. Now, will it? I think so, because here's the thing about Ergo and even Ethereum Classic, but we're talking primarily about Ergo right now, is if we're talking about post-merge coins that are going to be most relevant, I think you need to take into account a couple things here. One is that Polaris GPUs are just widely deployed. They're like the S9s of the GPU mining world, right? So if you're looking at like the GPU or the ASIC side of things, a lot of people don't want S9s, but the fact of the matter is like a huge percentage of the Bitcoin network is still S9s, even to this day with all the upgrades and so on. If you look at GPU mining, the most efficient card that's also just the most longevity that's been around the longest, excuse me. I want to make sure that's been around the longest is going to be the Polaris GPUs, which are going to be the RX 580s, RX 470s, and 480s and 570s, right? So the Polaris generation of GPUs. What's going to be important is those GPUs being able to migrate to another coin. Now, you have a couple ways you could look at this, right? You could look at it and say, well, what has to happen first is that the activity on the network has to go up and the price discovery has to move up on the network first for basically GPU miners to move over to it. I don't think that's practical. I think the way it actually happens is in reverse, meaning I think the GPU miners move over and then the price discovery starts. And the reason for that is because it's just not really feasible for anybody to really start participating on the network until you have a base of participants. And those participants, that base of participants typically starts with mining. So one of the good things, though, that you would want to take a look at if you're developing a coin or whatever is to pay attention to that and understand that where you need to put your place, where you need to put your focus as a smaller currency is on the initial base participants, which is going to be GPU miners primarily, at least if you want to reach a wider audience, right? A more decentralized audience, meaning if you're going to go like ASIC and you do basically like a SHA-256, you're going to be dealing with basically a couple heads of the company that are running massive farms. GPUs are going to be technically like more distributed, and so you're going to have more actual individual participants within your currency. That's going to be important. The other thing that's important is that wide group of hash rate that's going to be moving to another coin is primarily going to be RX 580s and so on, Polaris GPUs. And so the algorithm has to be friendly to those GPUs. And the fact of the matter is there's not really that many friendly algorithms to the Polaris GPUs anymore these days. You do have, like we could talk about going into something like Crypto Night GPU or something along those lines that don't hit it real hard. But outside of that in Ethereum, you're really only looking at Autolycos being friendly, which is Ergo, meaning Ergo, it may be Ergo that could be that move. It'll be interesting to see what these miners decide to choose, but I think depending on what the miners decide to choose, the activity will be driven up. Things that would be appealing to miners that, you know, I think a lot of people don't realize is going to be those DeFi options for extra earnings, those NFT options, other ways to participate within the network. It's not like you had a whole bunch of outside investors that were participating early on and hopping into CryptoKitties. For the most part, you were seeing miners doing something with the Ethereum they earned, and then that's kind of how it took off. It's not really any different with like a whole entire ecosystem. And I think what you will see is whatever ecosystem takes that hash rate will start to find its price discovery on its own and move up and up and up. And I think a lot of the reason why you see Ergo and Ethereum Classic here right now is because of these factors. Polaris friendly. They both have they both have DeFi options. They both have NFT options already built out. And then they both have wallet tie-ins that are common to people. So if you look at Ethereum Classic, you can tie that directly into MetaMask, right? What is MetaMask? Is MetaMask, you know, pretty much ubiquitous at this point. Any retail investor is going to understand how to add the RPC for Ethereum Classic, connect that to an NFT website, purchase their NFTs, connect it to a DeFi website, add their liquidity. It's going to be just like riding a bike. It's the same thing that everybody's been doing for a long time. From the Ergo perspective, you have ROI as the web browser function, and that one's tied to Cardano, right? So if you've been participating within Cardano, Ergo is going to make all the sense in the world to you. You're going to, once again, be able to just connect it straight up to an easy web wallet. You're going to be able to connect it to your DeFi, all the dApps that you want to use. You're going to be able to start experimenting with all of the options within the network. And the more miners that are on the network, the more experimentation of all of these dApps will be done, which will drive up, of course, the activity on the chain, which in turn drives up the price, which in turn drives up the fees, which in turn drives up, of course, the profitability. So these are components to, of course, all of these different cryptocurrencies, or specifically Ergo and Ethereum Classic, that I think puts them a little bit ahead of everybody else. Does that mean that I think that Ravencoin's not a good project or Flux is not a good project? No. It's just like from a practical point of view, I'm not going to put my 580s on Flux or Ravencoin. I'm just not. They don't run good. Why would I want to do that? So where do I put them? Where are my options? Ergo, Ethereum Classic, Ethereum. Then I could bump down to what? One of the Crypto Night GPU ones, maybe Conceal, something like that. But these are important factors. And like I said, I think the miners drive that price discovery more than people are really thinking about here. All right. Let's get into... Well, okay. We can show... I believe miner stats showing Ergo even higher, by the way, at 452 a day on 2 miners. So there is that to take into account as well. And Ethereum Classic still on the board at $3.80 a day after power. All of these will change, like your numbers will vary on a lot of different factors, so keep that in mind. Let's look at mining pool statistics. What I'm going to bet real quick, just for fun, is I'm going to bet Ergo is pumping in hash rate. Yep, pumping in hash rate, which means difficulty will start to rise along with it. So be very careful. Should you be switching all of your rigs over to Ergo or Ethereum Classic right now? There is potential for a certain amount of people to begin to do this, right? But I think, like, as a whole, not everybody's going to be able to conceivably do it yet. Unless, you know, I guess the price starts to skyrocket even more on these. We're seeing larger pumps on like Ergo and Ethereum Classic than we are seeing on pretty much anything else. Let's go to coin market cap, right? We'll do this lookup too. Look at the, let's see, let's look at the 7-day percent change. You got Ethereum Classic at 76%. Bitcoin Gold here at 50% up. And you got that Cardano that was 31% up. It went down 5% today though. So my feeling is on the Ergo situation, which let's see if it's in the top here. I thought, is Ergo not even listed on here? Has to be. Hold on. Let's see what the 7-day was on Ergo. Let's just search it. Ergo. Oh, 7-day. So it's up, what, 13% today? I wish it would show me the 7-day easier. The volume is up 70% as well. It's pretty incredible. What I would be looking for here, though, is like, my worry would be is if you see that Cardano dumping back down that 5%, that Ergo may follow that 5%, just delayed. It's hard to be sure how much those two are tied together in investors' minds. And, you know, the miners can save that too. But be careful. I wouldn't necessarily just go straight in ham, you know, YOLO into throwing your entire farm on Ergo or Ethereum Classic at this time. I would assume Ethereum Classic's pumping. Ethereum Classic impressively has settled out on hash rate at 28.9 terahash a second, meaning that what you're seeing on the profitability here for Ethereum Classic is where it's kind of settled in at this 331 a day. Give Ergo a couple more days, maybe. So there's the early players, right? I think those guys are already in there, though. And then there's the, I'm going to move over to this long term. I think you'd want to see more like here where you got 1, 2, 3. There's at least 3 days here where it's kind of like settled out in hash rate on Ethereum Classic after its pump. But on Ergo, we're just still within this first day of the pump. I'd want to see where this ends up after it's kind of settled out in hash rate. Take a look at Ravencoin. Ravencoin's at 3.27 terahash a second. Definitely not increasing in hash rate. Let's take a look at Flux. It was at 2 mega solutions a second, so it's a little down from that at 1.97 mega solutions a second today. And then let's look at Ethereum and we'll go through the big dogs, right? So Ethereum actually down quite a bit, down to 975 terahash a second. What does this mean? It does mean that Ethereum Classic and Ergo are stealing a significant portion of the hash rate from Ethereum right now. You know, that's 25 terahash a second, easy, stolen from Ethereum in a day. And that's going to Ethereum Classic and Ergo from what we can tell by the charts. So there you go. Fun stuff, right? Let's look at Bitcoin, just so we understand what's going on with Bitcoin. 219 exahash a second. It is increasing in hash rate from the 216 exahash a second. What does this mean too for miners, right? What are we seeing? We're seeing like a consolidation of like everybody moving into ASICs, and now really it's looking like if you were built into GPUs, you're doing a lot better off than if you were invested into like Bitcoin mining ASICs. At least right now, if we snapshotted right now as it sits. And that's because everybody just keeps continuing to invest in Bitcoin mining like we talked about yesterday, regardless of price. Whereas on the GPU side, with all the smaller coins and altcoins, what we were seeing is still that direct correlation between hash rate and price. So what does that mean for you as an investor into mining? It does mean that if you're looking at Bitcoin mining, you can expect that the hash rate's going to increase regardless of price on Bitcoin at this point. However, you should still see the correlation between hash rate and price in GPU mining, meaning if we're once again snapshotting right now, GPU mining looks more enticing to me because I can kind of bet on that fluctuation of price to correlate still with the fluctuation of the hash rate on the network, which is more traditionally what you would expect from a trusted system. Let's take a look at mining profitability for the past 90 days. We have Mining Pool Hub in first, Flex Pool in second, Crazy Pool in third. For the last 60 days, we have Mining Pool Hub in first, Flex Pool in second, ZET in third. For the last 30 days, we have ZET in first, Mining Pool Hub in second, Flex Pool in third. For the last 21 days, we have ZET in first, Mining Pool Hub in second, Flex Pool in third. For the last 14 days, we have ZET in first, 2 miners in second, Flex Pool in third. For the last 7 days, we have ZET in first, Flex Pool in second, Ethermine in third. For the last 3 days, we have ZET in first, Flex Pool in second, Ethermine in third. And for the last day, we have ZET in first, 2 miners in second, Nanopool in third. If we look at, of course, the ASIC market, we do see an increase in the Kadena mining profitability up to $133 a day. Not quite the recovery we're seeing on GPUs, but still respectable. The rest of these, obviously, like we saw, this happen yesterday, which was the flip of the A11 over the KD5 for the first time in a while, meaning that Ethereum mining is definitely more profitable than the Kadena miner at that level, right? At that entry price level or whatever. I think the Silicon A11 might be more expensive now though too. Again, we'll look on BT miners here in a second. The L7 is back up with that pump in Doge. If you were just mining Doge alone, that's $22.27 a day on the L7. The Z15, we've been seeing this Zcash pump. I don't know where it's coming from. Maybe you guys can tell me in chat, but it's been interesting. Still got the Antminer D7 in here doing $26 a day worth of Dash. And if we scroll down, the ones that are really taking a hit that are not pumping up as much as the Antminer S19 Pros. I think yesterday was at 18. We're at $19 a day on Digibyte, which is more of the altcoins. But if you're just mining Bitcoin, it's only like $15 a day. So that's kind of what I was talking about before. These Bitcoin mining investments right now aren't looking as good as, well, pretty much the altcoin mining investments. But even the Kadena miners don't look as good as the GPU mining investments in increase in profitability. Plus the amount of options that are now available for GPU mining has gone up to 3, feasibly 3. Like if you're basically mining right now and you're trying to cover power costs and all of that, and you're in an area where you're basically paying, let's say, the average of 13 cents a kilowatt hour in the United States, you have 3 different options that are going to be profitable at this time, which is the first time really in probably since the last bull run where this has actually been an option for GPU miners without the speculative portion, right? Because there is that speculative mining that we've talked about before. Let's get into questions and answers. Remember, super chats never required, always appreciated. The channel definitely needs it for sure, because we need to get those interactions up. But other than that, go ahead and tag @SonOfATech. It'll make the message orange for me to read, and I'll be able to read it much easier. Let's get into it. All right. MMO Star says, @SonOfATech ETC pool is coming on the 28th by Binance. There you go. The Drem says, @SonOfATech, would it be best to focus on yield right now over a few dollars extra a day? I'm on the fence using 2 miners at the moment, but mining the altcoin seems to be like a decent option. I'm not sure as far as yield. I know that apparently Bits made a video about it. I'll watch it and try to get my perspective on it. It's going to be up to you, like from profitability wise compared to like reinvestment wise and how much power you have available, etc. Like obviously I have like only certain amount of power left right now before I'm done. Like I'm pretty much capped. So what do I do with that money? Like yield farming is not a bad option while we wait, right? Anonymous Miner says, @SonOfATech, how is Varus mining on mobile? I haven't tested yet. It is only on Android. Dave says, @SonOfATech. Hey, Dave. What's up? How's it going? Having a good day? Please tag @SonOfATech and I'll read the questions. Says Scott Schultz says, @SonOfATech, are you a fan of Robert Breedlove? His series with Jason Lowery is about the game theory of proof of work. It's absolutely awesome. I'll have to check it out, man. Goldenwell says, @SonOfATech, good morning from Seattle. Always good to see you in chat, my man. Miners Collective says, @SonOfATech, there is a bit stream out there for Ergo. Okay. Let's see what's up here. Scroll down. All right, just someone. You asked a question, but you didn't tag me, but I am reading it. He says, do you hold a portion of your mined ETH or do you sell everything? I hold no ETH right now. Dun, 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 dun. Now that I'm using 2 miners to get Bitcoin payouts, and then I'm usually taking that Bitcoin payout and dumping it into Ethereum Classic. However, due to some emergencies, I am pretty heavily liquidated after helping a friend out yesterday. So we're going to have to like earn some more here before we have rent and all that due in like 5 days. Yes. Gotta love it. Wes says, @SonOfATech, what GPU would you recommend for someone trying to build from the ground up? It's going to depend on pricing, right? So like I've gone over like really reliable GPUs like the 1660 Supers, which I really like. The unreliable GPUs like the GTX or the RTX 3090. We've talked about the RX 5700s. If you're mining ETH, are very good. You know, the RX 580s are going to be pretty difficult to configure if somebody hasn't already BIOS modded it for you. So maybe stay away from those. However, you're going to learn the most on a RX 580, I think. Like from like detailed overclocking and BIOS modding and so on. I think you're going to by far learn the most there. But it's really up to you, right? Like, it depends. And it depends on price and where you're getting them from and all of that. Talon says, are you cool telling us whether where you're finding $7 a mega hash? Yeah, Facebook Marketplace. Paul says, @SonOfATech, Ergo has a uniquely bad difficult adjustment algorithm. It's going to be down around Raven profitability in a day and then stay there for a week or two. Their difficulty adjustment, like I said, yeah, we're going to have to give it like 3 days. And then I think you're going to see a significant adjustment in the price. However, what we can also say is that Ethereum Classic's looking really good because it's been 3 days at pretty solid profitability after the spike in the hash rate. GG Fiend Crypto says $4.99. Thank you for the $4.99. Says, did you see Best Buy in Texas has tons of FE cards? You just got a 3060 Ti FE in Waco. Yes, I did. We were just talking about it at the beginning of the show. I said run down to Best Buy if you can because they're available. Wizna says, Ask Son of a Tech, what are your thoughts on Cortex and Cero? I don't really have too many thoughts on them. Cortex, that would be Chinese-based coin, so being proof of work is a little weird because it's illegal over there, I believe, last time I checked. Also, it's NVIDIA. Look, the biggest problem with most of these coins is that they do not support the most widely deployed GPU for GPU mining. That's the number one problem. Like, people need to understand that. Like, that's going to dictate a lot of the moves that are coming up. As far as Cero, I don't have any thoughts on it. I know it's like a privacy coin. I think that in theory, there are other better privacy options from my perspective. Oleski says, Ask Son of a Tech, do you think the endgame Ravencoin mine and hold is smart enough to throw a 3090 at it? Do you think the endgame Ravencoin mine and hold? I don't even know what you mean by that. I mined a ton of Ravencoin. I've been holding it since the last bull run, and it really hasn't performed that well. Do I think it will perform better? I don't know. I'm not really sure what's going to happen with Ravencoin, right? I know I don't like mining it because I don't like what it's done to the GPUs that I have tried mining it with. I don't know. They need miners, though. Abhinsek. I can't pronounce your name, bro. Let's go. Ask Son of a Tech, are you dual mining on light hash rate GPUs? No, I'm mining Flux, so no need to dual mine. Blunted says, Ask Son of a Tech, when can I move all the rigs to Soakcoin? Please don't do that. It won't be GPU mineable anyways, or profitable on GPUs. Surge says, Ask Son of a Tech, should we start mining Ethereum Classic? It's up to you. Remember, anytime you're going to spike that network, you need to let it settle, and then we'll see where we're at. Increase of hash rate will decrease profitability. Everybody moves over to it too soon, it won't happen. Me personally, I'm still just going with the mine Ethereum and then swap out to Ethereum Classic, essentially. No worries, Dave said he has a bad connection today. Just feel free to re-ask your question. We have another $2 super chat from Wes. Says, been watching your morning show most days. Well, cool. Thanks for watching most days. My goal right now is to start getting us over 500 concurrent viewers a day. We'll have to see if that can happen. Maybe this bull run will help, and we'll see. But share the show for me. Hit the likes, the notification bells. Come back and comment. If you watch live, come back and comment on the video. That will help immensely. Especially because, in a weird way, because I'm running the YouTube spammer tool, just to be like completely like transparent with you guys, running the YouTube spammer tool and like deleting all the spam comments kind of hurts me in the algorithm, interestingly enough. So it's a little weird. So just as many genuine comments as possible definitely would help out. If you guys don't mind coming back after the show and putting a comment on the video, that would definitely be helpful as well. And then if there's anything I can do better, and you can always tweet at me any news topics you find relevant. I'll definitely look at them. If they're interesting, we'll talk about them. If you guys got a way or direction that you want me to go, let me know. Let's see. Gandalf Gray says, Ask Son of a Tech, when thinking about expanding to a facility, is there a ratio profit to expenses that would be good, like being able to mine 3 times expenses? The problem is your predictability on that isn't really going to be able to like, the way I did it was like essentially, I guess it was like a 3 times. I'm trying to think about how much more I was looking for. But okay, because here's the other thing that you need to take in consideration. If you're going to be looking for a facility, you also need to be thinking about future upgradability. However, the hard part with that equation that you have to think about is how fast can you scale up? So like, let's say you're on 200 amps right now, or no, let's do better, because like if you're at a house, right? So you're at a house, let's say you got, I don't know, what's fair, 60 amps, 60 to, I mean, you could technically upgrade to a 200 amp panel. There's a lot that you could do at the house, but let's just say like you're mining in the room like I was, and you really can't do more than like 60 amps or something like that, right? So we had 60 amps running out at the house. Part of the upgrade calculation wasn't just the current profitability compared to what the cost would be, because obviously part of moving is the upgrade potential. So going from 30 amps to 400 amps, and now we're going to like 800 amps, the calculations are going to skew, because part of the problem is that it's just a never-ending game of trying to scale up. So then you have to run like future projections of like, how fast can I upgrade to compare, how fast can I get like all the power usage done? You know, how much revenue is that going to potentially bring in? Can I cover this and all that? Part of the thing though too is that like a lot of what I do, including the YouTube, is stuff that other people just don't have the risk tolerance for. And I realize that. And like for a lot of you guys that are GPU mining, the great thing about GPU mining is that you don't have to be super risk tolerant if you're just moving or like mining out of your house, right? With a couple rigs. And in that case, we could also talk about like the big boom coins. If you could just do like a spec mine coin, so on, maybe there's stuff around there where you could hit it big or whatnot and like have a little bit more fun with it, or the solo mining stuff. Once you start taking this, first of all, I think you should take the home mining seriously and treat it as a business anyways. But once you start taking it super serious and you're moving out to a building, and you're really getting into that, the fact is that like, it's not for the faint of heart. Like I am having so much anxiety that I'm just having to learn personally how to deal with and stuff like this all over the place, because I'm in 2 sections of the basically in my income that are wildly inconsistent, right? Like YouTube last month does 6,000. This month it does 4,000. Right? Like we're having like the worst month we've ever had on YouTube, even though I'm doing the most work. The mining, right? Last month we did like almost nothing. Like we cleared like $3,000 after revenue. And you know, that's going to have to go into basically just like you can't upgrade to like that much. Like that's 1 or 2 GPUs. So it scales down, but then we've had months where it's like significant and super great last year. Right. So I think there's like, because of the unpredictability of it, you have to be bold. You have to be willing to fail. And like, the fact is like, I've talked about this before and I've thought I'm failing all the time. The only thing that helps me out as far as all that goes is I just wake up and I do it again. And I wake up and I do it again. You know, mining farms down. Is there something I can do better? Can I do some more maintenance on the GPUs? I go out there, I work on that. YouTube's not doing as good. Can I figure out like what people need to listen to and watch? What helps them out? What can we do there? But it is really just waking up and doing it again. I can't give you the 3 times thing, right? Because the fact of the matter is like when I moved out, sure, I was making 3 times what the rent and the power would be, right? But the goal was to upgrade. But technically, even with all the upgrades and stuff, now I'm making less than I did when I was on less power, because the market's changed, right? So it's too volatile to give you those answers. And that's really honestly the way it is. And like, if that's going to stress you out all the time, just like, honestly, like mining, like running a mining facility, especially on your own, is like by far like the most anxiety driving thing that you'll ever go through, I think. But I think it does make you like a stronger person or an individual, because you got to be able to still function within society, right? As you're going through it. Mario says, Ask Son of a Tech, got a new rig, but it's in a reboot loop, restarting every 15 seconds. No post. Already checked troubleshooting guide, but no luck so far. Any tips on what to do next? I assume you unplugged all the GPUs and everything and started to boot it up, right? And then if it's not and it's rebooting from that section and it's just not posting at all, then more than likely, like, reseat the CPU, reseat the memory. If that's not the case and that doesn't fix it, you know, swap out the power supply. These are just basic troubleshooting tips. See if the power supply will fix it. You know, then you could also swap out the CPU, and then you could swap out the memory. Sean Marshall says, Ask Son of a Tech, one of my 5700 XT memory temps are hitting 90C after changing pads. Is it safe to leave it at that temp? Typically, you're good all the way up to, on the 5700 XT, throttling starts at 104 degrees Celsius. Trevor says, at Son of a Tech, how important do you think being a good trader is to running a successful mining operation? I don't think that it actually matters at all. In fact, the biggest benefit to mining that I think a lot of people ignore is the fact that because you're selling to pay your power costs, you'll technically be able to file, I mean, if you're doing it like I did it, well, I'm filing losses on capital gains. Block Lobster. Is that what it is? Says, Ask Son of a Tech, are you still doing a Spotify podcast? Yes, it posts every day. Usually before the, and it's just this show over on Spotify for you guys to listen there. Detroit Irish says, Ask Son of a Tech, how hard is it for a coin to switch algos? Do you see an altcoin switching to ETH hash once ETH is gone to try and get some of the security from the algo? Well, there already are enough ETH hash coins to go out there. How difficult is it? Usually, typically, algorithms on the coins don't change to like drastically. They're usually iterations of whatever they're forked from, right? So if you look at like all the Equihash algorithms, it's usually just an iteration on top of iteration on top of iteration, right? It's never like, oh, we're going to swap from Zcash to ETH hash or whatever, right? Or Equihash to ETH hash. It's never like that. It's not a full jump. It's usually just an upgrade to the algorithm. Ravencoin's the same way, right? XV or 16RV1 version 2, and then Kapow's just really built on top of that. So I don't really see that actually being a thing. I think what you may see, if any of these developers listen to me, which I don't, like, obviously, like, I would claim that they are all more intelligent than I am, but if they take that perspective of, you know, needing to support these RX 580s, I think that maybe they could make the algorithms that they're currently on more friendly to the RX 580. That's a possibility. Devs for the actual mining software themselves could also make these changes, or maybe find something that makes them more efficient. There are these other alternate possibilities outside of that. We have another $9.99 for a Flux node is what he says. Thanks for the content. I am still mining away about 10 coins a day. Eventually we'll get there. Is that 100 days? It's 100 days, provided things don't go terrible and I need to pull it out to pay for something, which could definitely happen, because like these past few months, I've been pulling out way too much crypto to cover living expenses, because as you guys know, living expenses are skyrocketing. And then what else is happening? Of course, YouTube revenue is going down, mining revenue is going down. It is what it is. So, you know, it could happen again. And then at that point, I would be pretty disappointed. But I am saving up for a node right now, mainly because I want to do the how-tos and stuff like that. Trevor says, ask Simon Tech. Nope. Okay. Got that. Got that. Secret Recipe Crypto says, ask Simon Tech. I'm on Ghost by McAfee Oversight Team now. We just released full A9 32 ring signatures. Big things coming soon. Okay. I have no way to verify any of that. Andre says, ask Simon Tech for your show is the best way to begin my day. Thanks for all the good information. For sure, my man. Interesting says, ask Simon Tech, why is DGB the main coin for ASIC's profitability? However, it is on almost no exchanges. A lot of that started with the collapse of the Venezuelan dollar back during the last bull cycle and the fact that they use it a lot. Power Trip says, at Simon Tech, how do you swap with no fees or little fees? Centralized exchanges, but I don't know exactly which one you're talking about. That's going to depend on the coin too. But in a lot of cases, like the strategy would be like mine to an exchange, or pretty much swap for you what you want and then send it out of the exchange for your holding, right? Mario with the $4.99 says, thanks for everything, Blind Run. I appreciate everything you do. Thanks for the support, my man. Wes says, at Son of a Tech, I started mining in 2017 and shut it down after the crash. Big mistake. You only fail if you give up. You know, I did the same thing, and that's kind of where I was at as well. Part of it was I only ever got to build like 2 rigs, and they weren't doing a lot. And then, you know, we're going through the same thing now, right, with the dip and everything. I don't know if this is going to last as long or whatever. Right now, it's looking like up again, which is interesting. But no, I think like I've been there too. I got back in a little earlier, you know, before, because I kind of saw the bull or the cycle, super cycle coming again. So I got back in early enough, and I've talked about that on this channel a lot. A lot of that did come down to like depression. Look, man, like I am absolutely terrified of wasting my entire life working for someone else, not being able to go see my kids' events, not being able to do that stuff. So this for me is really like my fight against all of that I'm terrified of, right? Because, you know, that's what my dad did. It didn't seem like, you know, and he still does it to this day. I still work a lot. But I haven't missed a T-ball game, right? I haven't missed the important stuff. I take it out of my day, and I don't have to ask anybody for it. Because believe me, when I had to ask other people for it, it never happened. Just someone says, that's Son of a Tech, why aren't you a verified creator on the Brave reward system? I'm pretty sure you have an audience that would tip in a lot. I should be, so I'm not sure exactly where you see that, but I'll look again. I get the payouts. Charles says, at Son of a Tech, if I switch my 1 gigahash farm to mine ETC instead of ETH, will I get the payouts that are more frequent? I'm currently being paid out every 7 days in ETH. Yeah, in theory, you would get more frequent payouts. If you're going to do mine to an exchange for Ethereum Classic, be careful with that. I would mine to Coinbase though. Crypto.com and Ethereum Classic don't go well together. You're talking about 6 days worth of confirmation times before your deposit goes in. Lucas says, at Son of a Tech, thanks for all your hard work and content. Will you play the new Harry Potter game? The MMO? I don't know. I never really got into Harry Potter, and then every time I try to watch it with the kids, like everybody either falls asleep or we just do something different. Scott Schultz says, ask Son of a Tech, why don't you run a Patreon? It's much steadier income. Also cultivates a more focused audience. So the thing that I was looking at currently, well, first of all, I feel like the numbers aren't there, right? Like, frankly, like the numbers aren't there. The number drop off for even memberships on the channel is ridiculous, right? We have like 400 memberships and 175,000 subs. I don't think I'm doing enough. I don't think I'm doing a good enough job on the channel to drive interaction to justify a Patreon. I just don't think I do. The only thing that I have been looking at is spinning up a locals page specifically for Soakcoin. Now, the reasoning behind that is like Soakcoin is a labor of love. It's not anything that is going to make me money because there's no pre-mine, airdrop, or anything like that, right? So one of the ways I thought that could be interesting that might work with Soakcoin is we could spin up a locals page for it where the community can come and participate. You know, you pay like the yearly cost. I could use that as revenue, but I could also use the locals page for those that are more interested in like all of the coding and like the process of like what we're doing with that, would have a place to go and see all of that and could participate within it, right? Helping build nodes or whatever it may be. And then it helps me monetize maybe like that whole pet project. That's the only thing I was kicking around. However, once again, I don't think that I have the interactions to drive anything there. Ben's 310 says, $9.99. Thank you for the super chat. Says, any developments on upcoming interviews? No. Pretty much the Ergo interview has never happened. I don't think Armenio's really interested at this point. I don't think that we'll be snagging that. You know, I put out soft feelers everywhere that I can. And I try to do that with mining hardware as well. Look, man, like, I don't think a lot of crypto companies just do not like, obviously, like I get a shit ton of this stuff. And then I get a shit ton of like, hey, shill my coin, but we don't get really like mining hardware. And then we don't get like necessarily all that other stuff, right? So I don't know. Alan says, not sure if you tried it with YouTube. I have kids' music channels for works best is boosting your videos within the first 24 hours of release. I'm not going to pay YouTube anything to boost anything. Never have. I don't think that I would want to. Interesting says, ask Son of a Tech, do you have a garden? We're actually in the process of it right now. Yes. It's, hey, man, I'm working a lot. Don't remind my wife that I have more work to do. You son of a bitch. You son of a bitch. Gandalf Gray says, Ask Son of a Tech, thanks for the answer, bro. Hang in there. And when you get stressed, remember you're providing invaluable service to lots of people. I'll do what I can to help your channel. Thanks. For sure, man. And like, I do know that I could just, here's the deal. I'll be straight up. Like, I really think this show is super important to getting all the information out, teaching fundamentals and everything. But I do know that this show does not perform as well as if I just go sit on my ass and vlog something in the mining farm, which is significantly easier and does better. I'm fully aware of that. But I don't think that giving up on the show is the right answer there. I think I could work more and try to do more vlogs, though. I think I could do that. Boy Matthew says, Ask Simon Tech, what is your mining strategy for now? I'm mining Ethereum. It's getting paid out in Bitcoin. Been swapping for Ethereum Classic. I'm mining Flux, saving up for a node on 6 GPUs. And then I am spec mining Caspa because they will be the first ones to really utilize heavy hash outside of the optical proof of work path, which there's optical Bitcoin, which is on heavy hash, not to be confused with the kind of the GPU form of heavy hash that's in Caspa. Plus Caspa probably could move to optical. I don't know that they will. If they do move to optical, it'll get really interesting because it would have the potential of spiking that coin's price through the fucking roof, but at the same time, hurting all the GPU miners. So I don't know what they'll do there. Razumek Mali says, ask Tech, why don't you mine ETH plus ZIL? It provides a better profit. Because ETH plus ZIL means that it's switching between mining ETH and mining ZIL all the time. There's really only one pool, the EZIL pool, that I would trust there primarily because when you kick off there all the time, you're basically losing your place in the Ethereum pool that you're dual mining because you're not really dual mining. You're either mining ETH for a while or mining ZIL for a while. Raw Adventure says, ask Tech, you should learn how to fix ASICs. That's what I do. Be your own boss. There you go. Detroit Iris says, ask Tech, twitching this weekend at all? I want to. I don't know if I will. I've wanted to all week. Ricardo says, hi, Son of a Tech. Do you think crypto is going up or fiat is going down? Of course fiat's going down, bro. That's what's happening. Scott Schultz says, ask Son of a Tech. I don't know, man. I would kick you a few shekels a month on Patreon and locals, etc. Yeah, I'm looking at it, man. We'll see where we go. Mario says, ask Son of a Tech, if you could start your mining business over again, what would you do differently now? Actually, I'm pretty happy with it, to be honest. Yeah, I invested as hard as I could. I really couldn't invest any harder. I sold all my cars and did everything I could. I spent all my money on doing it right before the bull run. I timed it perfectly. I don't think that there's really much else I could have done except start earlier. I guess I could have never stopped through the bull run. Or through the bear market. That could have been helpful. But if we're talking about a timing thing, I don't know. Like, nothing there. I have thought about, like, taking out loans, but, like, I really like not having loans, too. So, Leonardo says, ask Tech, when I try to use the PO state on Hive OS, my GPUs... on my GPUs, 3080s and 3060 Ti, nothing happens. Am I hitting the checkbox wrong? I don't know. I have to play around with it. When people says, ask Tech, you are like BBT. I wish. I would definitely put BBT way above me. Look, man, he's already driving those Mercs, going on them yachts, chilling. I should have done what BBT did. Andre Morris says, ask Tech, do you think Toncoin has a future or only as other momentary currency in the market? I think it's just, honestly, it's the adoption thing. Like, miners are utilizing it. It was a way for miners to gain or garner additional revenue. And that's really the only reason Ton is a thing, in my humble opinion. I think it's dead after that. After the contracts are done, I think Ton's done. Alan says, ask Tech, if you have a SOAP branded, tested, and certified server mining case, definitely switch your entire home farm over. Just saying, keep it up. Man, I've wanted to do that for so long. I have an engineer buddy that I worked on one during the last run cycle on, but we really like manufacturing. All that's hard, dude. And then if we wanted to do like a US one, what are we going to do? It's going to be way expensive, but I don't know. OG Max says, ask Tech, you buying GPUs, and if so, which ones? Not buying GPUs, been buying ASICs. Unfortunately, that bit me in the butt, so I wouldn't really recommend it. Sean Voltas says, $5 super chat. What's up, Sean? Ryan says, ask Tech, I made 2 rigs this past year already ROI'd before the merge. I got in a few months in before profit tanked. Nice, dude. Chet Pot says, ask Tech, regarding Twitch streaming, anyone with an Amazon Prime account gets a free Twitch sub to use. If your Twitch channel can accept it, I'll be happy to set up a Twitch account for that. Yes, I do have a Twitch, and we have streamed on it. My goal with Twitch is to... if I'm gaming, I'm going to be on Twitch, unless I'm playing with my kids. Now, I am not gaming near as much as I used to, but I will give you guys the link to it. And if you're into gaming, I did a poll on Twitter about the Twitch stuff. I am fully aware that 50% of you hate the fact that I even play games. Don't worry, I got that. But for the 50% of you that like video games and want to watch, you can follow me at BlindRun on twitch.tv. And honestly, take this into account. If you follow me on Twitch and you have questions, it is very intimate over there, meaning there are not very many people in chat, and I can pretty much get to it all the time. Oh, and I should have, yeah, I need to mute those alerts. But thanks for the follows over there. But essentially, I talk about crypto over there while I game, and you're gonna get more questions answered over there when I am live there. Raymond Lee, thank you for the $100 in is that HK? What is HK? What does that denote? Is that Hong Kong? Some? Thank you, good sir. It's a big one. Sean say he forgot to type. He was going to say thanks for the show for sure. Coffee. Wes says, Ask Simon Tech, are you going to bring back the thing where you show viewers rigs? I enjoyed that back in the day. I would like to bring back Mining Rig Wars. I feel like I would love to do that. But I also feel like... So those never perform that well either. I don't know. Let me think about it. Because I have thought about a reboot of that. And I've played around with it. But it does mean like, I guess posting every Saturday. Something like that. Charles says, Son of a Tech, you should play Hunt Showdown. I've played it before. Right now I'm playing Elden Ring. Latrell says, Ask Son of a Tech, thanks for all the priceless advice. Thanks for watching, my man. Rod Ventures has 1,000 Flux. Have you staked it, good sir? You should stake it. Yeah, Mining Rig Wars. Rig Wars. We should bring it back, though. Whoo. Yep. All right, ladies and gentlemen, boys and girls. I think I'm done staring at the screen. I got to clip some videos and send them off to the thumbnail guy so that we have clips. I'm going to be swamped today and tomorrow with personal stuff. So I'm not sure what I'm going to get done for dedicated videos. We have the V20. We have another wallet from Stone. They sent me their whole thing. I think we have all the wallets from Stone to review. So the whole line at this point. AAA Wave actually sent this one over, funny enough. So when the company reached out and said, can we send some wallets? I said, yeah, don't send the Stone V20 because I already have one of those. You said the Twitch doesn't take me to the channel. It takes me to my channel. It's Blind Run on Twitch. Best Buy drop was crazy. I should have gone to the Best Buy drop. I was looking at it. This is a hardware wallet by SecUX. They want me to do a review and they don't even have affiliate links though. Kind of sucks. All these companies, man, they rob you. They're like, okay, for that $8,000 sale of an ASIC, we'll give you $30. I'm like, cool. Great. Gamer subs payouts like $78 for the month. Bruh, affiliate life is wild. Andre says, Ask Tech is better buy an NVIDIA Founder Edit or buy GPUs made for assemblers like Zotac edition. So right now, the NVIDIA Founders Editions are better to purchase because their retail prices are cheaper. So if you get one at a drop, they're going to be a few $100s cheaper than the third party because the third party retail price adjusted while the NVIDIA Founder Editions did not adjust. So you're looking for the Founders Editions when you're purchasing. Underground Mining says, what happened to your Bitcoin ASIC? The power supply died. And then I shipped it back for RMA, and then China shut down because of, you know, the war on the pandemic. So no Bitcoin miner. Womp womp. The worst investment of the year by far. Thanks for watching, guys. I'm gonna get out of here. I better get clipping. I got a lot to do today. I kind of feel like I need a nap. I'm not sure.